Good afternoon and welcome to the Asian Midday Marketwatch. Our guest today is David Koh, founder of the Smart Investor in Singapore. Now, David, great to have you on the show as always on this Friday.
Thank you.
Now, David, before we get your insights, let's take a look at how markets in the region are performing. But we're going to start with the crypto markets first. Bitcoin is at 56,119. It's down 6.25%. Ethereum is at 4,042.78. It's down 5%. Now, the Straits closer to home, the Straits Times Index is at 3,231. It's down 0.18%. Across the region, we've got the KLCI, which is at 1,524.91. It's up 0.07%. The Shanghai Composite is at 3,534.27. It's up 0.39%. The ASX is at 7,724.8. It's up 0.15%. The Nikkei is at 29,742. It's up 0.48%. The Hang Seng is at 24,838.62. It's down 1.87%. And rounding up the numbers, we've got the Kospi, which is at 2,965.72. It's up 0.62%. Now, David, what's your view on market performance today? The Hang Seng seems to be the outlier.
Yeah, that's right. With the exception of the Hang Seng index, I think the rest of the market is just treading water. They almost feel like water polo players, I think, just sort of doing their egg beating and trying to just simply keep their heads above the water. But yeah, you're right. The Hang Seng Index is a notable exception, down nearly 2% today. And that is primarily because of Alibaba. And I think that there are now sort of huge concerns, not only about Alibaba, but the regulatory environment that is in place in China. People are a little bit concerned about what could happen, particularly after Alibaba sort of mentioned some things that I think got people thinking, Brian.
Now, what were they, David? Because if you look at all these Chinese stocks, it's a sea of red with the exception of JD.com.
Yeah, I know. Well, what happened yesterday was that Alibaba came up with quarterly results and profits were down about 80-odd%, even though revenues were a bit higher, but I think the market was expecting the revenues to be a lot higher rather than just a bit higher. So what then happened was that the boss of Alibaba came out and talked about the changing regulatory landscape. I think he was very careful about the words that he was using, but what he's really pointing to is that the authorities are clamping down on certain sectors of the Chinese tech sector. And of course, Alibaba is the gorilla of the Chinese tech sector. And consequently, you saw some of the other companies out there sort of falling quite significantly. But as you quite rightly pointed out, with the exception of JD.com. Now, JD.com is a lot smaller player than Alibaba. And I think what the Chinese authorities are trying to say is that Alibaba has become a bit of a monopoly in China. And what it wants to do is to take away some of its monopolistic powers. And that has benefited to some extent JD.com, which is a much smaller player. And perhaps what is going to happen is that Alibaba will have to gradually give up some of its huge market share to some of the other players that could benefit JD.com.
Now, from sort of negative news on the tech sector to more positive news, we've got news that Apple is, and this is news out of Bloomberg, is coming out with a fully autonomous electric vehicle as early as 2025. Could you tell us a little bit about that?
Well, I wish I could, because I mean, Apple is a very secretive company, and what it does behind closed doors, not many people know what exactly is going on. They can only speculate. And I think really what is happening is that Apple is looking at this autonomous vehicle or the electric vehicle market and saying, this is huge compared to, say, the mobile phone market, and we just want a piece of that action. And you know for certain that if Apple puts its mind to doing something, it is going to do it pretty well. And so begin to wonder, you have a company such as Apple that came up with things like the iPod, you have the iPad, the Mac, and then mobile phones. And then you say, well, how is it going to transition from that into something so much bigger, such as autonomous vehicles?
But isn't the underlying, so here's the thing. Essentially now cars have changed. We are transitioning away from the internal combustion engine, which is a completely different technology, into electric vehicles, which from architecture and basic technology has a lot of similarities with the smartphone.
Well, I think it has. I once jokingly said that the reason why Tesla was so successful was because it worked out how to get an iPad to run a car. And I think, and I think, all the other companies are doing something very similar. They say we have the technology behind things like the tablet and the mobile phone. And how difficult can it be to translate what we actually know to something that already exists? But I think in order for Apple to succeed, it mustn't try to, for want of a better phrase, reinvent the wheel, right? What it needs to do is to partner with a company out there, and it has to choose its collaborative partner very carefully. It could be Honda, it could be Toyota, it could be Volkswagen, it could even be Hyundai. And some people are saying maybe it is Hyundai that Apple could be collaborating with. And so Hyundai makes cars. You don't really want to sort of start learning how to make cars from scratch. But what you do have is technology. You have the iPhone, you have the iPad, and can you
also have, David, you need the traditional players because you then have production capability. If you think of how Apple works, it doesn't make its own stuff. It outsources it. So Hyundai then becomes another Foxconn, but for the automotive business.
It could very well do. And I think you could be sort of barking up the right tree there. I think it would have to do something like that. But let's not forget also that Apple doesn't want to be a mass producer. It doesn't want to be the Ford or the General Motors of the car industry, but it does want a niche, just like it has with the iPhone. It doesn't want to be a mass producer of mobile phones for everybody, but it wants to be a very selective niche player and to be able to charge a premium for what it wants. But if you go on the internet and have a look, there are all kinds of speculations about what this iCar could actually look like. But all I hope is that they don't keep on upgrading the operating system every 6 months so that I have to turn my phone off because it no longer receives calls. And unless I upgrade my iOS system to the latest one, I'm not going to have, I'm not going to be able to make phone calls at all.
Now, let's take a look at how Apple stock is performing right now. Apple is at 157.87. It's actually up compared to its peers. It's 2.85%. But overall, with the exception of Meta, US tech stocks continue to be in the green.
Yeah, quite right. And I think, what they're hoping for is that interest rates will remain lower for longer. And we have to remember with these technology companies is that what you're actually buying is the earnings or the revenues many years into the future. So when you start discounting that, you don't really want to be factoring in a huge discount factor, which is driven primarily by interest rates. So what you want is a stable interest rate environment.
Now, David, speaking of interest rates, there's a lot of speculation over the next Fed chair. Will Chairman Powell remain, or Fed Governor Lael Brainard, Brainard, as I think I pronounced it correctly, will she be nominated to take his place? What's your view on this?
I don't know. Let me get a coin and I'll toss it, and I'll tell you. Heads it's Powell, tails it's Brainard, right?
But what is her policy slant versus Powell?
I think she is actually more dovish than Powell. So to put it another way, she is going to look at the economy a lot more closer and say that, yeah, we're not going to be increasing interest rates as quickly as Jay Powell might. That's not saying that Jay Powell will increase interest rates, because I think he's going to be fairly dovish as well. But he has indicated that they are going to be removing this stimulus. This tapering is going to take place. But as far as interest rates are concerned, I think Brainard is not going to be nearly as aggressive as Jay Powell is.
Now, David, as always, thank you very much for coming on the show.
You're welcome. Thank you.
Now, we've been speaking to David Kuo, founder of the Smart Investor, coming out of Singapore, on Biztech's Midday Market Watch. I'm Brian Fernandez. Please check out our various social media platforms as well as our website, www.biztech.asia. Thanks a lot for tuning in.